Hey folks, welcome to Pro Trader Strategies. My name's Eric Wilkinson and this is Spotting the Trade. What we're trying to do here in these videos is get you what you need to know before you start to go. And what we're going to do is talk about the economic data, see how that impacts the overall markets, and then we'll wrap it up with some option strategies that we might be able to implement around these directional assumptions we come up with. But first, let's get started with some economic data. We've been talking about it. This week is pretty light and there's really nothing to talk about there other than tomorrow we get the CPI. That's going to be a pretty important economic data point because it's going to be showing inflation there, folks. We're expecting to see that come up in the 0.7%, which is pretty massive move there for something like the CPI number in such a short time. So everybody's going to be keeping their eyes on that as we start to approach that tomorrow, maybe shoring up some positions. Something to note with the earnings that we've been seeing, about 75% of the companies have beat on earnings. We're still seeing this slide. Was it that we were expecting more from these earnings numbers? No, I think it's all of the other ancillary aspects of what's going on in the global arena there. We've got the Russia pushing on the Ukraine. Now, keep in mind, we talked about this a long time ago. Russia and China were running some military operations together. That tells me, folks, that there is no way that there is going to see a conflict on the border between the Ukraine and Russia, at least during the Olympics. It might happen right after the Olympics, but folks, I do not think that there is going to be any escalation at the border before the Olympics is over, because the Chinese government, I mean, even Putin's probably a little bit nervous of the Chinese government. So I don't think he's going to step on any toes there. Let's get on with the markets. We got crude oil coming off of those 90s back into the 80 handle. I'd like to see a 70 handle here, folks. Yeah, a lot of people are saying that this number is being driven higher by inflation, a weaker dollar, and demand. Yes, I think there's some demand out there, but I think this is a little bit overdone on the demand aspect here, guys. I think that folks are pulling back on driving and everything else. Economy is moving pretty good. I just don't know if it's there to sustain an $89 or $90 a barrel mark here in crude oil. I think that as production rates start to increase, we saw OPEC Plus not decrease any of their production rates. That's going to get these folks back online. And, here in the United States, we were producing 11 million barrels a day at one point in time. We are below 10 at this time. That's lack of supply there in the market being shown up there. All right, bonds have broken through this 153. Wasn't really looking for us to come back. A lot more folks are talking about 50 basis point moves at a crack here for the Fed. Now, we haven't seen 50 basis point move in the Fed, I don't think, since probably the 90s. So this is going to be a pretty big deal. We went to Greenspan back in the day and talked to him about a couple of things, how they were working these FOMC meetings. They used to they would have a meeting announcement, or they would have a sit down meeting for 1 or 2 days, these FOMC meetings. That didn't necessarily indicate that they were going to give us an announcement as a rise or a cut in rates. They could go at any time. And we talked to Greenspan and said, hey, listen, you are really messing with a lot of people here by just going off meeting. We had a guy in the bathroom when you went off meeting and wasn't able to offset his hedge working a spread. You usually would work the bid and offer on your spreads, and if it started moving, you could kind of offset that leg. Well, if you're in the bathroom, you don't see those ticks starting to happen. So this guy lost a lot of money, and we talked to him. Hey, it's not even the guys on the floor. Think about your bankers that could be doing the same thing, and those guys are working with billions of dollars that they need to try to hedge. You can't just do this off meeting and throw this caution to the wind and everybody's hedge off kilter. We need to have a little bit more of a finite time that you're going to be doing this. Well, he also went to 25 basis point cuts at that time. For the most part, we weren't, or increases, we just weren't moving at massive multiples. Actually, 9/11 was probably the last time we saw some 50 basis point moves there. But anyway, it's a very rare occurrence, but folks are starting to tout that type of move here in the bonds there. Here we go. Gold back into the trend channel here yesterday. And what was it? On Monday, we were talking about it breaking back up into there. All right, we're going to start seeing this bullish move here. I don't think we're going to break out of it. Remember, resistance when we're breaking into it, and it acts as support again. So we've got two nice lines. We've got a really aggressive trading line here and a little bit looser one for newer trader folks that don't want to take as much risk, a little bit further away there on this trend channel. But we are back up into that core trend area. Settlement there, I would look to buy it. Risk to the upside here on a settlement inside of this purple line there for gold futures. Now, Bitcoin, I think, is going to continue here to make this move back up to at least the point of control right around that 47,500 area. I think we're going to see it break through the 50-day simple moving average. Yeah, we do have a bit of a topping pattern here, a gap some folks would say might want to get covered, but I just think that the strength in these retainers of value, if you will, like gold is a retainer of value. Well, Bitcoin's being touted as a retainer of value and a flight to safety. Well, we'll have to see if that's going to shake out with a correction in equities. VIX coming off, that's because we're seeing this move higher in equities. Finally, now Nasdaq up 180 some odd points here. Back to the point of control, though. I talked about this about all week, I think, every day, that a migration back to the point of control is kind of what I expect here for this week because we don't have a whole lot of economic data. I do not think you're going to see this Russia crossover into the Ukraine before the Olympics is over, so that gives us another week or so. And the markets are going to start to consolidate here throughout this earnings season. So I think that Nasdaq being back there, now Dow Jones Industrial Average making a little bit of a move higher here, getting back above that 50-day simple moving average, which is going to indicate shorter term bullishness. So risk to the upside in equities right now, as we're seeing the strength. Something to keep an eye on here for the E-mini S&Ps is this overhead 50-day simple moving average. We saw it peel through that pretty easily in the rest of the markets. I don't know if we're going to see a necessarily overhead resistance there, other than now it's becoming more of a target there for the equities. And we can see all week, pretty boring sideways action, just no discernible moves here. Risk is to the upside here in equities, though, I would have to say going forward for the rest of the week. We've been getting good economic data from the earnings. We've been getting good news out of basically every company that has earnings calls. So I think that it's starting to feel like risk is being lifted on the upside there, and that is where we're looking to move. Something I want to talk about with Coca Cola, we talk about the swing trades. This could be a great swing trade opportunity if you get a confirmation, a big red candle right next to it, closing near the low of the day, at least below the previous day's wick there. Now, something to note, I've talked about when you get these two types of candles back to back, basically two mirrored images, if you will, back to back there, that could be a continuation pattern. So while I usually am a little bit more aggressive and would jump on something like this here in Coca Cola with a candlestick like this, well, because of the previous day's candle being a mirror image of it, sometimes that indicates the continuation pattern, despite the fact that it's at the top of a move. So I'm going to hold off on this, but a close today looking to pierce below 61.70, let's say, settlement below 61.70 would make it look like a confirmation of a rollover here in Coca Cola. So something to keep an eye on, spotting this trade. Keep your market action tied to Coca Cola today. And if it looks like it's settling below 61.70, let's just say 70, that's going to look like we are confirming this top and look to roll over to at least $60 to see if it'll find that support from that previous high. And that's about it, folks. Make sure you guys smash that like button. Also comment. I don't see any comments there today. Comment. I'll circle back around, make sure everybody's clear of concept, and make sure you subscribe. There's a little bell in there. Probably going to be a little bit more inconsistent on the exact timing of when I do these videos. So make sure you guys have the subscribe button with that little bell. The bell tells you when I pop in unannounced. All right. That's all I got for you guys. Thanks for joining. And if you can't take that, take it easy.